All right. Welcome, everyone. Put the chat up. Go ahead and drop a comment in there when you're tuning in. We'll wait a little bit to get started here. Hope everyone's having a good morning. There we go. Good morning. Good morning. All right. Thank you, everybody, for tuning in early. We're just going to wait a few minutes here to get started. Make sure we go live on all the platforms. Give everybody a chance to jump on here. So thank you for tuning in early. We'll just hang tight. Happy Friday, everyone. Hope everyone had a productive week. Getting ready for the weekend. Good morning. Good morning. Buenos dias, Matthew. You threw some flavor in there. Everyone else is good morning. Good morning. All right. All right. Thank you, everybody, for tuning in. Looks like we could go ahead and get started. Looks like we are live on the different platforms and got everybody tuning in.
All right, go for it.
All right. So, welcome, everyone. My name is Kyle Hiersche. I am the COO of the Mortgage Calculator. We are a correspondent lender. And I am joined by Nick Hiersche, our president, and Jose Gonzalez, our sales manager. Just like we do every morning today, we're going to go through the different rates for the different programs, and then we're going to do a deep dive into a topic. And today, that topic is going to be ITIN loans, ITIN borrower loans. We're going to talk about that, something that a lot of people have misconceptions about, something that a lot of people have questions about. We found a lot of loan officers have questions about it, as well as customers, borrowers. And so hopefully we can clear some of that up today. We have Jose here, 27 years of experience, and he's ran into his fair share of ITIN loans during that time. So we'll get some expert advice and knowledge here on the ITIN loans. But first, just like we do every morning, we'll have Nick pull up our tool and go ahead and go over the actual rates for today for our standard programs as well as our non-QM programs that we specialize in here at the Mortgage Calculator. So with that being said, Nick, let's go ahead and check out the rates for today.
All righty, thank you. Let me go ahead and switch my screen. Thanks everybody for joining us. Let me pop open our pricer and we will get started. All right. So this is our pricing tool for our team of mortgage professionals. So this is not necessarily a full loan estimate. If you'd like a full loan estimate on any of these programs, please get with one of our loan officers. We have over 350 loan officers in 21 different states, and we can do our DSCR business purpose loans in pretty much every state. So please just let us know. But let's go ahead and check out our rates for this morning. Remember, today is February 24th. It's just after 11 a.m. Eastern, and we now have live rates for this morning. So let's check out a few scenarios as we do every day. We're going to compare for a primary home first our conforming conventional options. Then we'll go into our FHA options, which is typically the next best option for our borrowers. And then we will go through our expanded guidelines, aka non-QM, which allows us to access over 4,500 additional loan programs beyond the conventional and FHA. We also have VA available for our vets. If you do qualify for a VA loan, please let us know. We'll quote that up very quickly, and we appreciate you. But since not everybody qualifies, we won't do that live. And same with USDA. If you're looking at a property in a rural area, we can quote that in just a couple clicks as well. Please let us know. But let's start today, like we do every day, with our conventional rates. And hopefully we see some improvement. There was a little bit of panic earlier this week, but after yesterday's show, a lot of our rate sheets have dropped. So we should see hopefully a little bit of positive improvement here. For our examples, we'll do everything today as a purchase, 400,000 loan amount, 80 LTV, 20% down payment, 80% loan. We're going to look for desired price of 99. What that means is we're going to look for the best rate option for one discount point and buy down. That's what the computer's going to search for. So we'll see what we have. 30-year fixed loan is going to be a pretty standard scenario. Primary occupancy, as I said before, single family, 1 unit, state of Florida, Miami-Dade County. That's where our office is based. And for all our estimates, we'll also use a 760 FICO and a 40 estimated debt to income ratio. So these will be our basic setup for all of our scenarios. So first, let's start with our conventional programs and see what we have. All right, well, we have our top of the list here. Our conforming looks like it's about the same as yesterday. So maybe we'll have to wait until the afternoon to get a little bit more improvement. But we have a 6.875 rate for 1 discount point in cost. So I believe that's the same as it was yesterday, almost exactly. But last week we definitely saw some improvement. Hopefully we'll see some improvement later today. Now, if we switch back to the pricer, let's check out our next best option. If a borrower doesn't qualify for conforming for whatever reason, conventional, typically the next best option we're going to look at is going to be an FHA program. Especially just yesterday, the day before, the FHA, the HUD did announce that they're going to change the mortgage insurance premium for FHA. So in a few weeks, we'll see some even better improvement here. But let's check out what we have today for the same scenario, 80 LTV, FHA purchase, 30-year fixed. Everything else will stay the same. Let's see what the FHA programs are looking like. So at the top of the list here, one of these two options looks pretty good, a 6% rate for 0.75 in discount point cost. And then there's also this option down here, 6.125 rate for 0.625 in discount points. Both are about the same there. But always, as we mentioned, to remember to look into the APR here with FHA, especially because there are additional costs, including that mortgage insurance premium. But those fees are reducing here in a couple weeks. So hopefully we'll see some improvement on the FHA, not necessarily in the rate, but just the monthly payment with the insurance is going to be an improvement. So we're excited about those programs coming up. Please get with our team if you're going to go for an FHA loan. By the time you close that loan, we should be able to use those new amounts for the MIP premiums there. Now, where we really specialize here at the Mortgage Calculator, what we love to do is offer our borrowers even more solutions, even more options beyond conforming, conventional, and FHA. So let's check out our non-QM options. So when we click to expanded guidelines, that means non-QM, we have over 4,500 programs that fall under this, which allow us to use alternative income documentation for our borrowers. So we'll keep everything else the same, but you'll notice a new option popped up. We can use alternative income. So instead of full doc 2-year tax return, which is what's required for typically FHA and conventional, we can use 1-year alt doc, 2-year alt doc, new asset related, business bank statements, 12 and 24 months, very popular. DSCR, we'll talk about that in a minute for investment properties. Those are amazing. And our most popular program for our non-QM is going to be our personal bank statements for 12 months. And that's going to be typically for our self-employed borrowers. So many times our self-employed borrowers on their tax return maybe don't show as much income. But when we grab their personal bank statements for 12 months, we're able to determine a debt to income ratio using those bank statement income rather than their tax return income. And it typically allows our borrowers to either qualify where they would not qualify or qualify for more home or more purchase power if they were having trouble before. So we love to propose these options. Let's check out what our non-QM bank statement options are today. So looks like we have a 7.875 rate. So it's about 1% higher rate than you saw on the conforming options, which is really not that bad. Obviously, non-QM is going to be a little bit higher, almost always. But these are great options for our borrowers, again, who were not able to purchase that home and now can. So the rate's really not that bad, 1% higher than conventional, 7.875 for a 0.875 in discount point cost. We even have an option down here actually for a 7.25 for one discount point cost. So there's just tons of options here. You'll see on all of our non-QM programs. So make sure you get with our team so they can navigate which one of those programs will fit best for you. Now, before we switch it over to Jose, we always want to go into our investment properties. So we will check out our live rates for investment properties. We love to work with our investors, whether it's your first investment property or your 100th. We have options for everybody. So let's check out our same scenario, 80% loan to value, so 20% down payment. And we're going to compare our conforming conventional options with our non-QM options. Remember, FHA, VA, USDA are not eligible for investment properties. So really simply, we're going to compare conventional to our non-QM. So we'll start with conventional. We will keep everything else the same on this scenario. So let's see what the investment properties look like. And as we say every morning, there are additional loan level price adjustments. We call them basically a penalty that Fannie Mae and Freddie Mac have added to investment properties. So unfortunately, the computer's not able to find any options for one discount point in cost. So you see the computer found a pretty decent option here for a 7.125 rate for 3.375 in discount points. So a lot of times our investors, love to be able to get the lower rates per se that conventional offers, but these high discount points definitely get them asking us for alternative solutions. So thankfully, so at the mortgage calculator, we have thousands of other programs that are eligible for this scenario as well. So this is a great option for our borrowers that do qualify full doc. But if you want less discount points, unfortunately, we can't really go up in the rate to lower the discount points, which most of our investors are okay with as long as the property rents well. So our solution to that is, let's pull up this scenario one last time here. We'll go 80% investment property, and we're going to do our expanded guideline program so we can do our alternative income. And the best program we have and the favorite for our clients is going to be our DSCR program. And that's because it does not actually require any income verification from the borrower. We don't need any employment verification or any income verification from the borrower. We're simply going to use the estimated rental income from the property to determine if that covers the PITIA, the mortgage payment, taxes, insurance, and association. And typically, if it covers it, that's an over 1 ratio. We can definitely do that loan. We have tons of options for that. And even if it doesn't quite cover it, we even have DSCR options for a little bit lower than 1 or even no ratio options. So we love to do these DSCR loans. It helps our investors purchase more property quickly, refinance property quickly, and all of that good stuff. So the last option to select on our non-owner occupied, our investment properties under non-QM, there's typically a prepayment penalty. So we always price it with 3 years as a standard, but there are options for 0 if you'd like. It just limits our loan programs. And there are options for 5 years if you're going to hold the property for a long time to reduce the cost. But 3 years typical, so let's set that up for our standard scenario. And we'll do our last scenario for today. Oops. What happened? What did I mess up, Kyle? Kick it back to primary or something? Uh-oh. We got something misprogrammed here. So I guess I might have to fix that. Fortunately, my pricing tool might have got changed a little bit, so I'll have to go on the back end and try to reconnect that for you guys. But let's go ahead and pull up the topic for today. So let me go ahead and stop sharing my screen. And pull up our topic. So before I pass it over to Jose, we just want to talk a little bit about what he's going to go over today. So ITIN borrower. I'm going to have Jose explain it. He's obviously well more versed in this. Taught me everything I know about this topic in particular for sure. But ITIN is going to be a specific set of borrowers who do not have status in the U.S., right? So we're not talking about someone that might be a DACA or has a work authorization and anything like that, right? These are typically borrowers who do not have a legal status in the country, but they are paying taxes via their ITIN, their International Tax ID number, right? So many times these are what might be maybe like a migrant worker or something like that who doesn't actually have legal status, but they come and they work here and they're able to make income here and they pay taxes here and, they live here. So we do have options for those borrowers and they are very tricky. So Jose is going to go through a couple scenarios for that. And remember, these are not foreign nationals. So foreign nationals are a different set of borrowers who do not live in the U.S. and do not derive their income in the U.S. So, we did a show on that a couple weeks ago. So, if you're interested in the foreign national options, obviously we have those. Please check out those shows from a couple weeks ago. But this is a specific set of people who may not have a U.S. passport, may not be U.S. citizens, or even have a work authorization of any kind, a green card of any kind, but somehow they're in the U.S. Maybe they expired their visa and they continue to work. And most importantly, they continue to pay taxes and have that ITIN, International Tax ID number, where they can actually file taxes in the U.S. So I think that's a pretty good intro. Jose, I'm sure you can go in much more detail, but you ready to get started?
Yes, sir. Thank you very much. So, yeah, as Nick was saying, one of the main misconceptions in the industry, because, in a lot of parts of the country, they're used to dealing with basically vanilla files, really easy stuff. Everything is cookie cutter. They may not really even know what an ITIN is. Many don't even know what a foreign national loan is. Well, at the mortgage calculator, we have all the solutions and all the programs. That's what differentiates us from the masses. So the first thing to do is to clarify, as Nick alluded to, what is an ITIN borrower? What differentiates them from a foreign national borrower? And also what differentiates them from a national borrower. When I'm talking about national, is either somebody who's a citizen, somebody who's a permanent resident, or somebody who has a work authorization permit. Any of those three statuses will get you a quote unquote, regular loan. What everybody would want to get, either your your agency conforming, conventional, FHA, all that kind of stuff. But what we have here now is the ITIN, which is not a non-permanent resident alien and not a foreign national, right? They are somebody who is residing permanently in the United States and working permanently in the United States. And either filing tax returns here or showing some other kind of proof of income here, depending on the program that we're selecting. Because remember, that's what it boils down to, is what are the available slots out there where we can fit this borrower. So in the first example that I have here, right, we're going ITIN full doc. So what do I mean by full doc? Okay, full doc means that in this scenario that we're verifying their income with either tax returns if they're self-employed, or pay stubs and W-2s if they are an employee, right? So I just put a little commentary here that ITIN borrowers do not have legal status in the U.S., but are living here and working here. We do require 2 years of income verification, whether it be full doc or alt doc, where alt doc is 1099s, right? So this option does allow. So this is at an 80% loan to value. So obviously there's not going to be a 95% option nor 90% option. Maybe there's an 85% option. I didn't find one for this morning's show, but what I can guarantee as an absolute is that there is an 80% option. You know, we have had a little tightening of the guidelines in the last 12 months. So, you know, these were available at an 85% option previously. And, you know, I'm not saying that's not available right now, but the option we have here is 80%. You see the lowest cost option that actually has a little bit of a lender credit is 9.375. So that's a pretty good rate. But they can buy it down for a cost of 2.875 points or 11,500 in loan discount to 7.99%, right? So that's very good when you consider we are basically financing an individual who does not really have legal status in this country. It's like a gray area. We're agreeing to lend to them, you know, according to the guidelines, because we can verify their income, we can verify that they're working here and all that kind of stuff. But still, you know, due to the limitations, you know, this is pretty much as good as it's going to get, but this is very good option here at a 7.99% when you can figure that right now conventional full doc loans are like 6.75 to 7%, somewhere around there. So this is a very good option for the full doc. Now we have an alt doc purchase option. And here, alt doc, we're talking about 1099s, right? So you're not really looking at the W-2, you're looking at a self-employed individual or a contract worker that gets paid on a 1099. And what you're going to find is that this is going to be usually more the route that your ITIN borrower loans are going to go, because they have an ITIN, international tax ID number. They don't have a social security number, right? So what ends up happening is it's a lot easier just to set them up as a 1099 contract worker. You know, they still do their job, they still get paid, but the employer lets the ITIN borrower figure out what they're going to do about their taxes, how they're going to file that. Here's your money. Thank you. Have a nice day. But we do have options for them. So it's just a little bit more costly in the rate. So you see the lowest cost option here, 9.625 at par, no loan discount fee, with a buy down available down to 8.25 at a cost just under 3 points. Very good option considering we are using 1099s now, right? So obviously we'd have to compute the income according to the guidelines where for that particular loan program. For a 1099, it's not going to be usually 100% of the 1099 income to be considered. There'll usually be some type of a haircut, whether it be 90%, 80%, 75%, whatever it is that the guidelines for that particular program say. That's what we adjust. But again, very simple option, and usually the option that these loans go. But it gets even better because we can do cash out refis on our ITIN borrowers as well. This is not just for purchases. Now, all these examples I did are for primary residence. So here you're looking at lowest cost option of 9.875%. That one actually has a little bit of a lender credit, $469. And then the lowest rate that we can buy down to, you're looking at 8.375% rate at a cost just under 3 points. Again, very good option. This is cash out refi, 75% LTV, going full doc. But wait, there's more. Now we have our ITIN alt doc cash out. Now it gets really esoteric here. You're like, how can we do it? Well, we can do it. Here it is right here. Obviously, rates a little bit higher. You're looking at 10.125 actually offering a lender credit just under half a point for that rate. But you can buy it down to 8.625 at a cost just under 3 points. Very good option for an alt doc cash out ITIN loan using 1099s. Now, what would happen if your borrower went into your standard box retail bank and said, I don't have legal status in the U.S., I don't have tax returns, and I want to cash out my property up to 75% loan to value, then they would just look at that borrower with a perplexed look and wonder what's going on here. I have no idea what you're talking about. What is an ITIN? But they come to the mortgage calculator with that scenario and we'll say, here you go. Here's your option. Which one do you want? Because we're going to have multiple options there. So again, very good options here. ITIN borrower, that's like in between foreign national and U.S. resident, but we can do it all day long. Looking forward to helping you structure your ITIN cash outs and purchases.
Perfect. Thank you, sir. All right. Well, I see there is a question or two. Do you want to answer a question, Nick? Let's see here.
I'll pop it up.
Okay. There we go.
Here you go, Jose. Foreign students who study in the U.S. and work part-time following the I-10, they typically have a status when they're studying, right? They get a visa status, correct?
Well, that's a status to be here legally in the country.
Mm-hmm.
What it's going to boil down to, again, on any ITIN loan is, do they have an ITIN to begin with? An ITIN is an international tax ID number. So they're going to actually have that document that says, this is your ITIN to begin with. Because with the ITIN is how they file their taxes, if they file taxes, or whatever they do that connects to them is with the ITIN. So that's the first qualifier here to be able to do the ITIN loan. Secondly, they need to have U.S.-based credit, right? The foreign national does not have U.S.-based credit. The ITIN borrower does have U.S.-based credit, and the credit has to qualify for whatever program that they're applying for, just like any other borrower with U.S.-based credit would require. Whatever they have and whatever is required, they need to meet whatever is required there. So at that point, and then the part-time scenario, well, depends how much income they make. If their part-time job pays them, enough money for them to qualify for the loan, no problem. But then it falls back to the qualifying requirements for any loan, whatever that the guidelines say for that program. If it says we got to use 2 years of income verification, then we got to make sure they use.
Okay, perfect. I think that was the only question. So let's go ahead and wrap it up right on time here. We do this show every single weekday at 11 a.m. Eastern time when the rates come out to show the rates, and you can see how they go up and down. It's really cool day by day. And then we do a deep dive into a topic just like we did today with the ITIN. So tune in weekdays at 11 a.m. Eastern. Everybody have a great weekend, and we hope to see you on Monday.